Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, April 16th. On Wednesday, the stock market surged 2.3% after investor sentiment was lifted by positive earnings surprises from several major corporations. All 10 economic sectors posted a gain. At the same time, crude oil and the euro spiked to fresh all-time highs. Intel was one of the most influential stocks on Wednesday and was by far the most actively traded issue. The tech bellwether reported adjusted earnings of 29 cents per share, besting the consensus estimate by 4 cents. Intel also gave a reassuring outlook, which helped calm the market's fears over demand and margins. Technology outperformed with a 3.1% gain, as did the NASDAQ 100 with an advance of 2.9%. The semiconductor index surged 5.5%. Financial firms also reported earnings that pleased investors. JPMorgan Chase topped expectations by 4 cents per share, and Wells Fargo beat estimates by 3 cents per share. The financial sector gained 3.3% on the day. Other companies that topped estimates included Coca-Cola, CSX Corp., Abbott Labs, and Johnson Controls. Although all of the above companies topped expectations, a positive for the stock market, not all reported strong earnings relative to last year. Intel's net earnings fell 12%. JPMorgan Chase's earnings were down 50% after $5.1 billion in write-downs, and Wells Fargo's earnings fell 9.1%. Nevertheless, the market was pleased that earnings were better than feared. The dollar index, down 0.9%, posted a steep loss, with the euro climbing to an all-time high. This provided a lift to commodities, which were up 0.8%, especially precious metals, such as gold, which gained 1.7%. The gains in commodities helped boost the materials sector, which advanced 4.9%. Monsanto also helped matters, as its stock surged 7.2% after Goldman Sachs raised its earnings estimates on the firm, according to Bloomberg.com. Crude oil hit an all-time high of $115.07 per barrel. The weak dollar and an unexpected drop in crude inventories fueled the buying interest. As a result, the energy sector gained 2.7%. Economic data were mixed, although the reports had a mostly muted effect on trading. The March Consumer Price Index rose 0.3%, while core CPI, which excludes energy and food, rose 0.2%. Both matched expectations. The inflation reading is outside the Fed's comfort zone, but it provided the market with some relief, as it was not as high as feared. Housing data, though, were poor. March housing starts plunged nearly 12% to the lowest level since 1991. Building permits decreased 5.8%, also falling to the lowest level since 1991. Traders have grown accustomed to the weak housing news and shrugged off the data. March industrial production unexpectedly rose 0.3% after falling 0.7% in February. Economists expected production to shrink by 0.1%. This counters all the manufacturing surveys from March that showed declines, which were clearly wrong. The industrial sector, up 2.5%, posted a decent gain as a result. On Thursday, the market will have a barrage of earnings reports from 65 companies to sift through, including IBM, Merrill Lynch, and Pfizer. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.